Welcome to another episode of Talking Tax. My name is Tatiana Penido, and I'm here with my partners Lisa Workman and Gil Mendes to discuss a highly relevant topic for foreign investors holding shares in Brazilian companies, the recently proposed Brazilian Bill number 1087. As you may know, this bill aims to reform individual income tax here in Brazil, but it also may bring significant implications for both residents and non-resident investors that hold shares in Brazilian companies, as it proposes changes to the tax treatment applicable to dividends paid by Brazilian companies to both domestic and foreign shareholders. It is important to emphasize that while we will analyze the content and potential implications of this bill in this episode, everything we will discuss may undergo significant changes during the legislative process, as the bill will be reviewed by Congress and may be subject to alterations along the way. We encourage our listeners to closely monitor the developments, but stay tuned and we will be here to bring you the most relevant updates. So let's dive right in. Gil, can you give us a brief overview of what Bill 1087 aims to achieve?
Sure, absolutely. In 2022, during the presidential campaign, President Lula has made a promise that he would reduce income tax for low-income individuals. He made a promise, and this is his attempt to fulfill the promise made during the campaigns to reduce income tax for low-income individuals while establishing a minimum tax for high-income earners. One of the key aspects of this new bill is that introduces or kind of reinstates taxation of dividends. It will affect both resident and non-Brazilian resident investors starting in 2026 of January if the bill is passed into law.
That's interesting, right, Gio? Because up to date, we do not have any taxes levied on distribution of dividends. So, Tatiana, what are some of the major changes proposed in this bill?
Yeah, Lisa, as you mentioned, one of the major changes is the introduction of a 10% withholding income tax on dividends paid to Brazilian resident individuals if these dividends surpass a certain threshold. But also this withholding income tax of 10% will be levied on distributions of dividends to non-resident investors regardless of any minimum threshold. And this is a significant shift from the current regime, if approved, of course, where dividend distributions are generally exempt from withholding taxation. Additionally, and we will double click on this in the next section, the bill includes the provisions for a tax credit relief that may mitigate the tax burden on non-resident investors, but this is not trivial.
Hi, Lisa. Can you explain how will the 10% withholding tax impact the non-resident investors?
Sure, Gio. So the 10% withholding tax on dividends will increase the tax burden on non-resident investors, right? Like I mentioned before, up to date, there's no taxation on the distribution of dividends, and this significantly changes the current system. But the bill also introduces a tax credit relief rule to ensure that the effective corporate income taxation, when combined with the dividend tax, does not exceed the nominal corporate income tax rates.
Lisa, can you elaborate on the tax credit relief provisions, please?
Sure. So I mentioned the nominal corporate income tax rates, and I think that that it's important to say that the tax credit relief is designed to ensure that the combined tax rate doesn't exceed so that rate. So it's usually 34% for most legal entities, it's 40% for private insurance companies and certain other entities, and 45% for financial institutions and banks. So if the effective tax rate combined of the corporate income tax and the dividend exceeds these thresholds, the non-resident investors will supposedly be entitled to a tax credit relief to eliminate this excess tax burden. So we still do not have that much clarity on how such tax credit relief will operate in practice with regard to returning those amounts to the non-resident investors.
Yes, and it will be interesting to see how these new rules will interact with existing tax treaties Maybe, Jill, you can explain a little bit what we can expect from this interaction of these new rules.
Absolutely, Tachi. From a Brazilian tax perspective, the 10% withholding tax rate on dividends is generally in line with the rates established in most of the tax treaties signed by Brazil, which generally range from 10 to 15%. So in practice, it's very unlikely that most of the Brazil tax treaties will provide any withholding tax relief on the new dividend withholding tax. However, there are exemptions, such as the treaty between Brazil and the United Arab Emirates, which sets a 5% rate. One important point is that there could be most favorable nation clauses in the tax treaties that may kick in that also may provide a 5% withholding rate on certain treaties that provide a similar a benefit on the most favorable provision. So with the shape just apart from now. So the most favorable nation clause may kick in certain treaties. So it's important to review which tax treaties have that provision. Eventually, payments made to those jurisdictions may benefit from the 5% withholding tax rate.
Yeah, well, that is a lot to digest. So, Lisa, do you think we can think of other potential issues or disputes that could arise from this bill when we compare this tax treatment of dividends to foreign quota holders, to domestic quota holders, for instance?
Sure. So I think that one potential area of dispute is actually the different tax treatment of dividends that are paid to Brazilian residents versus non-residents. So this bill specifically refers to Brazilian individuals that are receiving the dividends. And basically what it says is that the 10% withholding tax applies to monthly dividends that are higher than 50,000 reais when paid to Brazilian residents. But this threshold does not apply to non-residents, right? So in that, we already see that there is a differentiated treatment between the Brazilian individual and the non-residents. And we think that this could be an area that could generate disputes, since historically foreign investors have received at least the same tax treatment to Brazilian individuals. That being said, there are situations in which the non-resident investors actually get even a better treatment than the Brazilian individuals. And it's important to say that when we refer to a potential area of dispute, we're actually talking about the dispute that this type of proposed legislation would have in Congress, once this is historically different from the position that we've always taken in order to create actually an attractive environment for foreign investors to look into Brazil and invest in Brazil. So just to make it very clear here that when we're talking about potential area of dispute, it's not from a litigation perspective, but a lot more involved in the legislative procedure that we will undergo right now.
And well, not to mention, right, the compliance requirements that companies will need to consider under these new rules, right, Jill?
Companies will need to ensure detailed documentation and compliance with Brazilian tax regulations. Calculating the effective tax rates and corresponding credits will be crucial, and companies may need to revisit their positions and planning structures in Brazil. And that's a key point of discussion, that this rule on the dividend and the way the tax credit relief works will cause a lot of Brazilian companies owned by multinationals to revisit their tax planning position, whether they have to be aggressive in terms of reducing effective rate, and what will be the impact on not only Pillar 2, but also on the dividend distribution and the corresponding taxation, along with the tax credit relief rules that the rules propose.
Yeah. So, Lisa, what are the next steps of this bill?
So the bill still needs to be reviewed by Congress. And as we mentioned, there are some potential disputes in the horizon. We flagged one of them, but there are others that might come up. So none of the proposed measures are valid at this time. It's really important to monitor the legislative developments and assess the impacts of the new rules and any amendments or clarifications that may arise. So for now, nothing is in place. We need to undergo the legislative procedure and see if this will be actually approved by Congress and sanctioned by the president. It's also really important to say that in order for this law to be effective as of next year, it will have to be approved this year.
Lisa, it's very interesting. I would like to hear from both of you, Tati and you, what you think is the likelihood of having this bill passed into law. I mean, no pressure here, but I think our audience wants to understand what's your take on the likelihood of having that approved.
So I think that initially it's really important to say that next year is an electoral year in Brazil, and therefore we are running on a very tight schedule in order to have this approved. Tati, do you want to bring some of your insights?
Yes, absolutely. Well, it is a tight schedule because, of course, the bill has to be approved this year. But when the federal government proposed the bill, it's very clear that the impact is only on high income Brazilian individuals, right? And as a collateral damage, let's put it this way, the foreign shareholders here. So it's a measure that has a certain popular appeal, and no doubt, the current president will bet on this as something to gain popularity amongst like the voters, because at the end of the day, if the bill is approved, it should impact a very small number of individuals here in Brazil. So I would say that it's a wild guess, but I think there is a probability that this may actually be approved within the end of the year.
Yeah, let's hope that all of the discussions in Congress take into consideration this important collateral damage of the non-residents investors, and making sure that this will not create actually any issues for foreign investments in Brazil.
Yeah, absolutely. So thank you, Lisa and Jill, for this very insightful discussion. Again, as we've mentioned, the bill is still under review, may undergo changes during this process. We encourage our listeners to stay informed and closely monitor developments. You can count on us for that. Thank you for tuning in, and we'll see you in the next episode of Talking Tax.